Good morning, everybody. It's Thursday, August 15th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Quickly here, overnight markets had December corn down a half at $4.25. November soybeans were up a penny and a half at $9.70, and December Chicago wheat was up 3.25 at $5.59.5. This morning's weekly export sales report was solid for corn, 120,500 for old crop, 800,500 for new crop. Soybeans were well above the estimates, 221,700 for old crop and 1.3 million, little over 1.3 million for 24. Wheat sales, 399,900. That was at the upper end of the range. And meal sales, 113,700 for old crop, 140,100 for new crop. We also had consumer spending out here this morning. Retail sales were up 1%. That was better than expected. They were looking for 0.3% as the estimate. Stocks rallied on the number. We've got the Dow up close to 400 now here this morning. Initial jobless claims also came back friendly. 227,000. They were looking for 335,000. So that was better than they were expecting. Good morning, guys. Lot to digest here. I guess, Dustin, maybe a few thoughts. Good sales number here. Weather still appears to be pretty benign for a majority of the Corn Belt, as we're finishing out here. So maybe a few thoughts, and then we'll throw it around.
Yeah. So, the retail sales, for example, why would that matter for grains? Well, the initial impact is pretty dramatic right away on the currencies. So like the dollar index took off right during that time frame, and the impact on dollar denominated commodities, is negative generally when we see that. So, despite seeing what appeared to be pretty good soybean sales, we actually sold off after that 7:30 time frame, 3-4 cents in beans. And it could just be that the implication the currency has on it. So it's something to keep in mind that currencies still have a major impact on our competitiveness. We have been looking at a decent rebound in the Brazilian currency, the real. And the more we see of that, the more we're kind of exporting our lower prices to Brazilian farmers, right? And that makes them less likely to sell. And generally speaking, we have a very positive correlation with the real and beans, especially in short bursts of time. So that's what I think. What I'm kind of leading to is when you look at everything that's been thrown at the beans and the corn balance sheet, we've had some of the most bearish news yet this year, right? All the last couple of months have been near perfect weather. Completely different narrative change from what the early forecasts were at the beginning of the summer. Prices reflect that. We traded to new all-time contract lows in both that DEESH 24 corn contract and the NOVE 24 bean contract. And what I mean by that is they've never traded that low for that particular contract. They were opened in late 2020, and we're touching new lows here this week. But at some point, buyers and sellers still need to match up, and there's obviously not as willing of a seller, grower seller at this price point. So flash forward 2-3 months from now, when everything's locked away in the bin, is this a fair price for grains, right? Maybe we need to go lower first, but what is demand making on this, and how willing is the seller? That still is going to make where markets end up. So I don't want to have I think I've said this before, I don't want to have a big opinion about price right now. We're just trying to box ourselves into balance on, where does the grower get hurt most? And because we have things like crop insurance, and we have things like, we can somewhat rely on farm bill expectations for the year. There are some considerations to make, especially depending on where you are. If you're in, the few parts of the country that are not getting favorable conditions, or you got rained out early in the season, that's a much different strategy than if you're looking at, record-breaking, yield that's going to take you way away from an insurance payment. So yeah, it's kind of a vague response, I know, but you play to your situation is what I'm continuing to tell our customers.
Oh, very good, Justin. I mean, we touched on it a little bit just on the forecast and the way we're finishing out. But I mean, by all estimations, this thing is, the next 10 to 12 days look pretty good. I mean, below seasonal temperatures, and we're getting water in certain areas. Not everywhere, but we are getting some water.
Yeah, and it's hard to do this every day and not sound like a broken record.
Yeah,
the crops are going to be big. It's just a matter of how big. And we've written down really big numbers. Can they get bigger? Yeah, sure. So we're kind of getting into that where, a lot of people are getting into fields. They're doing real ear counts, kernel counts. They're getting good estimates. So we'll find out how big the crop actually is. And to Dustin's point, we've traded a lot of this. And, the counterpoint to that is, the farmer's been undersold and reluctant seller at these levels. And last year they were reluctant seller at $5 because we came from $6. And so we went sideways through harvest, through crop insurance, and then we broke dramatically after that, which caused, major issues. So yeah, it's kind of this, it's a tough one. I think that in my mind, the question is going to be more of how much grain has to be sold to pay back loans. How much cash is going to be available. We've already heard stories of, banks getting tighter on credit. So I think this is going to be a very challenging winter for a lot of growers. I think there's a lot of conversations going on right now about, rent negotiations and, the cost of fertilizer and what crops to plant, how much money am I going to get, and all those sorts of things. So, it's sometimes prices can change based on like the need, like when you have a bunch of money and farmers could just afford to throw it all in the bin, like we saw last year, because you're coming off of 2 record kind of gross revenue years. That's a different story than maybe if you're tight on cash and you have to sell stuff. I think that's going to be the question of when we go here the next 6 weeks, let's call it, between now and October 1st. How much has to be sold? And if the general outlook's bearish, a lot of times people, when you talk about farmers, like I'm talking about in general, store things because there's a bullish outlook or, optimism. But if there's high interest rates and high carrying charges, all those sorts of things, and the outlook is bearish by most growers, do we see a different response this fall than we have the last couple? I don't know the answer to that, but it seems pretty, everyone's pretty bleak. That's how you make a low eventually at some point, right? You overshoot it, you get over bearish. We saw this in 2019, we saw this in 2020. But that's the $1 million question, is at what price?
Right. So that was going to be my question. I mean, and you kind of alluded to it, but it's like, is that the washout? That's the where you get it overdone, and then that's how you can, recover and find a new price environment.
You will. And it's, every year's, that's why you have seasonalities. Obviously, we're going to have the most supply, coming into October, November, as we get harvest pressure, clean out old crop bushels. We've already written down massive yields. Can they go higher? That's, big crops get bigger type mentality. So there'll be some point where we overshoot it. I just don't know if we're there yet or not.
What's your overriding basis opinion then? If we've got this bumper crop coming that by all estimations, and guys have to move grain in the fall, I mean, is what you're seeing with basis, is this the time to start really paying attention there?
Well, yeah, I mean, it's probably past the time, but yeah, it definitely is. If you can't store it, right, and you have a record crop, you have to make a decision. And I think there's a lot of deer in headlights right now trying to figure out what to do. So the markets, obviously funds we've talked about this 100 times. You've heard about it everywhere. Funds are record short. They've actually been covering the last couple of weeks into farmer selling. So it's gonna be interesting what we do. I mean, typically you're talking about a first notice day low around September 1. And if it's a really big crop and it's proven to be a big crop, you probably make another low around October 1st. And that's just the facts of people having to move grain, figuring all that stuff out. And then whatever has to move. The rest is, probably going to be tight. Might do some basis only contracts or some way to get some cash, 60 or 70% advance just to pay whatever bills have to be paid. Dustin brought up yesterday when we were talking about, the crop insurance have to be paid by September 30th this year. What bills are due. All those types of considerations for cash flow. Unfortunately, a lot of marketing in the country is done based on cash flow needs, not on price or margins. It's when they need money. So if we see that, I think that's a real potential still. So I don't want to be too comfortable, with, that we're bottoming here. We talked about on the show plenty of times, we're in value areas. We're at areas where, crop insurance starts to kick in, farm bill payments, like all that's great in the short run, meaning in the next 2 months. It's called 6 weeks, 2 months. In the short run, I think it's about cash flow and needs that the farmer has, that, how much they have to sell to make those needs.
All right. Anything else on the grain side we want to visit about this morning here, guys?
Yeah, I had a question. Really, do you think wheat can actually help turn around corn and beans? Russia attacked Odesa last night. Who knows what kind of production you can get out of there then? Actually, in their production being down, Europe's being down, Argentina's having some issues during their developmental stage. If that continues, the unrest over there, do you think that would help? Corn and mostly corn, but about beans to follow with that.
Yeah, I'll add this. I think Dustin actually made a comment yesterday when we were talking during the trading hours yesterday, but we've kind of discounted every potential black swan event right now. And I think that is a big risk. It's, you get this feeling of like super bearishness, everyone's short. There's no coming back from this type attitude, and something usually happens. The problem is I can't think in my head what that is going to be, because
we never can.
Because it is so bleak right now. But yeah, Brian, I think that's a great point. We, 4 years ago, 3 years ago, 2 years ago, those stories would have happened and you put wheat limit up, and now it's just up 5 or 6, sell it off. So I guess my long-winded answer is, I think it could. It just feels like we're just so numb to anything right now, and just so everything's so bleak. So that's probably the time that something does. You come in one day and stuff's limit up. Just because.
Is that the power, Justin? Is that the power of the money that's been short? Is that are they able to override that?
I don't think. I personally don't think so. Look, they put a great trade on. The managed money, whoever they are. Yeah. They called it great. And I think there's been I think there's also multiple players that are maybe long equity, short grains, all sorts of things, but they've been right. And the farmer has been way over long. The farmer is getting squeezed hard right now. And I think globally, Dustin brought up the point of, the real move. It's maybe the first time we've seen the South Americans get squeezed to some degree. So, and maybe that's what we need to do. If you look at, the world stocks to use of beans are really burdensome. Yeah. We keep producing more and more and more, and demand's been stagnant. Now, we've tried to do things like renewable diesel in this country, but if you look at China's always bailed us out. They were on this uptrend of, 5-10 million more tons of bean imports every year, and they've been stagnant to lower. And that we talked about that, like the aging demographic of China and the maturing of the protein market in China. And so that combination's really hurt us. And meanwhile, Brazil, continues to produce 20 million more tons a year. And we're kind of at that juncture now where how do we shut that off? How do we pick up demand? And the only way to do that is lower prices and pain. And we're going through that. I don't know if we're in the first inning of that or the ninth inning of that, but that's what's happening right now.
And Doug, I'm sorry, Dustin. I was going to say.
I was just going to add to this too. I think a lot of times, and I think the bean number is probably a more accurate world, stocks number to look at. But I think everyone has to go back to pre-2018 trade war. In the midst of the trade war, we have to remember that China, they basically audited their stocks and they revised the prior 10 years of their stocks leading up to that point. Right. And so overnight,
for corn, you're saying,
right, for corn, for wheat, they basically said, hey, we're in the middle of a trade war. We don't need your product. We have more stocks than we can possibly manage, is basically what they said. And then a month later, they abandoned their ethanol program due to lack of stocks. And then they proceed for the next 2 years to be the world's largest buyer of corn for imports. So I think that it's pretty evident that those stocks don't really exist, or didn't at the time, at least. So even at this moment right now, you have China supposedly holding on to 52% of the world's wheat stocks for carryout, right? And same thing for corn. They've got more than 2/3 of the world's corn stocks are supposedly held in China at the end of the marketing season, step one, right? Like that number, you back out of these numbers and say, hey, China's not going to export wheat. They're not going to export corn. They're net importers, and they're serious net importers, right? Very large ones from Brazil still. Any sort of disruption that occurs in the next 2 years for production, I still think leads to, a quick demand rationing situation on the global scale. Now, outside of China, we are continuing to see rising trendline yields, and without, kind of a robust biofuels policy, we can quickly build, overly large stocks as we're doing this year. But we have to, I think, take stock in the fact that global numbers cannot just be looked at face value. There's a reason why the USDA WASDE posts world and then world minus China right below it, right? There's a reason that they have that. And we have to remember that the Chinese data is probably, something that we can't rely on.
Yeah, and I think I agree, and I think that's especially true for corn and wheat. Beans, I think, is a different case. So, because they're not, that's not the case in beans, and global supplies continue to go up. So, I do agree with you. I think it's going to be interesting to see what acres do. I look at, we talked about this yesterday in our office, but looking at the 25 soybeans, if they have any kind of rally from here, they look way overvalued. Especially with what costs are doing for corn. If these 25 corn is going to stay 440 or lower, I think there's going to be another massive switch to soybeans out of need. Because of, we talked about this last year and it ended up happening. And I think that was just the first year of a multi-year problem. If we're going to stay sticky inflation, all these things that we continue to talk about, beans are the cheapest thing to plant. And I think out of necessity, we're going to see a lot of pressure on Nov 25 beans. When you look at nearby at September got down to 940 yesterday, and you almost had 1040 beans, Nov 25. If you get those up to 11, I think there's going to be a ton of selling because that's the only thing that might make money. So the bean situation is definitely more dire. Now, again, we talked about this. That's assuming we get a 53 yield. Now, the weather, Dan, has been good, like you talked about. But we have to see what those yields actually are. 53 is a new record, obviously. I think we can get it. I think the beans look great. There are, areas that are probably sliding right now. They haven't got the moisture or maybe some disease pressure. But if we get those yields, it's going to be a really uphill battle, especially for beans, in my opinion.
And Doug, real quick here, guys. Doug Kirk comes with a question. Would an uptick in export business allow the spec shorts to cover without much price appreciation?
Well, I think to see the funds cover without much price appreciation there's got to be a transfer of ownership happening at that same time. So your transfer of ownership, in my view, let's say corn, for example, if they're extremely short. I mean, there's more short beans on a relative scale, but they're very short corn. And we also have, the end of the September contract coming, which we've talked about on the show. A lot of times we make lows end of August because that's the end of the line for DP bushels and basis only contracts. And it's also at a time when you've got crop tours going on and growers are doing their own yield counts, and they become more willing sellers when they're comfortable that their new crop is known, right? That's a lot of sell pressure and a lot of willingness to sell at that moment in time out of necessity, as Justin talked about, at the end of the season, and out of discovery of yield coming into harvest. And I think that transfer happens more willingly. So you if they're trying to buy 1 billion bushels of corn to cover without much price movement, you need the grower to sell 1 billion bushels to them kind of relatively in that same time period. Strong export sales could, they're, I think that would be a new buyer coming in, right? Whether or not they already have the futures coverage. But if China were announce a program much like they did end of 2020 going into 2021, that obviously led to a big price increase on its own. And if that coincides with funds trying to cover, I would think it would almost be a tailwind instead of a headwind for price rebounds. So
yeah, and like to that point, the funds have covered roughly 70,000 contracts of corn in the last 2 weeks, and we're 10 cents off the low, 9 cents off the low today. So, Doug, to your point, I think the question is when. If they want to cover as we're going into when farmers have to sell, we can have muted price movements for sure. If it's after farmers, sell what they have to, and then then there's a bunch of purchases and there's just no more interest in selling for anywhere near these levels, then I think that's where you get these big post-harvest rallies. So maybe that sounds a little oversimplified, but I think the best chance of that is we start picking up demand now, like we keep doing what we did today. Farmers have to sell, and after September 1st or 15th, like that seasonal time frame, we have a really good rebound going into when crop insurance expires. Some level where I think there's a lot of air between, call it 390 and 420 or 430 even, where there's not a ton of excitement until you start getting above those levels, outside of necessity to sell to raise cash. So yes, I do think there's some big air pockets in here. Same with beans. I mean, it could be $1 in beans too, where there's not a lot of excitement. It's not like everyone's going to be jumping up and down at 420 corn because they're making a fortune, right? So it just matters of how many people have to sell in the next 4 or 5 weeks, in my opinion.
Yeah, the other thing I was thinking too, just talking about market setup and what a fair price of corn is. Like, I think if you get the bins full and kind of locked away, and you get past your cash raising needs, through the harvest time frame and into the end of the season, maybe just into January, you're going to get a better look at what a fair value of corn and beans are, I think, than you are now, when there's a lot of necessity to sell coming forward. So it could be a flip universe of what we think buyers and sellers match up as after you get through those pain points of harvest and just that gut slot of that time frame. Mm-hmm. But like when I look out and I see D's 25 corn, D's 26 corn, both trading 450, and like not 6 months ago, D's 24, D's 25, D's 26 corn are all trading $5. We have reset the bar of what people believe a fair price of corn is all the way out the spectrum. And in an interest rate environment that's still quite high, despite like chances of cuts are growing. So there's an appeal by the market right now to say cost of production is going to come down, right? Because and this is true for North American growers, South American growers. Corn priced in dollars right now, there's still a big question how we match up and get consistent production in a profitable demand market at that price point. And that's why I'm very curious. We're always curious to see what the next year holds for markets, but like very, very curious right now with, because there's things that don't really add up about supply and demand, in my opinion, at that price point in the next 12 months. So.
Very good, guys. Real quickly here, Ryland, a little bit of a recovery in the livestock, still slow for cash to develop here this week. Maybe just a couple thoughts before we wrap.
Yeah, absolutely. A little bit of 190 trade yesterday in Iowa, but just not much enough to write home about. I think at this point, everybody's waiting to see what the bulk's going to be like. Looked like offers were right around 187, 188. So you still got the big discount on the board, but we are seeing futures kind of tightening up here, coming up to some pretty significant moving averages. You're closer to the 40-day. You're hitting 50% retracement off the July 25th break. So overall, the momentum's been good, especially in the futures market. You got open interest climbing. So overall, I think you got a lot more optimism than you did. The problem was, I think overnight is that beef prices dropped a little bit. So that may have soured things kind of coming into the session. But overall, it looks like we're kind of lining up. I think the expectations for steady now for cash. So we'll see how that develops as we go through the rest of the week. On the hog side of the market, also was led higher. There may have been a little bit of optimism, I think, in the commodity sector in general yesterday, just from all the talk of Fed rate cuts in September and just maybe some reinflation of some of these outside commodities. So if anybody was leaning too short, I think maybe you got a little bit of covering inside of that as well, just with the CPI data that came out. So it just kind of feels like you got a little bit of a bounce here kind of across the board. But hogs made a new high for the move. You're over the 40 days. So trend is starting to look good. I mean, typically what we see is you get towards the end of August and this market starts to take off a little bit. You really see that ramp up before Labor Day. So that's kind of what we're looking for now. Hopefully we can get a little bit more follow through, but it may just be a little bit too soon. So keeping our eye on it, but staying a little bit optimistic kind of going into Labor Day, Dan.
Appreciate that. Thanks, Ryland. We're open here now. December corn is down $0.0125 at $3.99.5. November soybeans are up $3.25 at $9.71 3/4. And December Chicago wheat's up $0.0125 at $5.57.5. Nopa crush will be out at 11 here this morning, looking for 182.3 on the crush side. Oil, we're looking for 1.6 billion pounds. So we'll look at those numbers and then have a wrap up of that in our afternoon commentaries. Tomorrow is Fun Fact Friday. Ryland will be subbing in for Brian, who'll be traveling tomorrow. So that should be interesting.
Big shoes.
Big shoes to fill. If you like the show as much as we like making it, give us a like or subscribe. We appreciate it. It helps us immensely in the YouTube world. But also keeps you up to speed on everything AgYield, opens up that premium content for you, keeps you posted on everything that's going on with us. So give us a like or subscribe. We certainly appreciate everybody tuning in every day. We do this every day that the markets are open at 8:15 Central Time. We're streaming live on X, Facebook Live, and YouTube Live. So thanks for the thoughts and comments this morning, guys. It was an awesome conversation, and hope everybody has a great day. We'll look forward to talking to you again tomorrow.